Welcome back to Tech Tune-Up. I'm your host, Paul Meeks. We're brought, as always, to you by my friends at Benzinga on their YouTube channel and my firm, Harvest Portfolio Management. I'm down here in Charleston, South Carolina, in the Bayou, and they're up in the Motor City, Detroit, Michigan. Today is April 1, 2025. Happy, I guess I could say, April Fool's Day, although the market has been badly fooling us as of late, at least for technology investors. So on this program, I'm going to talk about some interesting company-specific stories. I'm going to give you my list of stocks to buy and to avoid. And today we're going to do something different. I'm actually going to give you or share with you some important price levels for potential support to buy some of our favorite names. And then I'm going to wrap up, as I always do, with some tech trends. In the meantime, over the next few minutes, queue up your questions. And if we have time at the end, we'll answer them. And I'll be very honest with you. If I don't know enough about that company to comment intelligently, I won't. But I've been doing this for 30 years and covering the tech sector for almost all that time. So I would think I have some game. So let's move on to the stock tells over the past week. I told you last time that I was very interested in watching as a proxy for the AI infrastructure trade last week's IPO of Coreweave, which is now publicly trading, ticker symbol CRWV. And unfortunately, it was a test failed. The IPO 2 weeks ago was supposed to be priced as high as 58, and it came at 40, and it even has dipped since then, only a couple days of trading, slightly below that. Now today we're back over par, but this is bad news. I would tell you that the only thing that really surprises me, because I've done my research and I'm still bullish long-term on the AI trade, more on that in a few minutes. But why would this company force an IPO when, at least in the short term, the AI infrastructure trade has been a loser and there's all kinds of uncertainty swirling around Trump's tariffs? So the market has clearly gone from a risk on to a risk off position. Couldn't these guys have waited 3, 6, 9 months when everybody's bullish on AI infrastructure again, and Nvidia has given us another great quarter with great guidance, then bring your company public? I don't know why they did this. So they sacrificed a lower price and they sold fewer shares than they wanted to originally to get the deal done. Don't understand what the investment bankers were thinking and what the management of Coreweave was thinking. In the meantime, I'm a private investor in at 48. Now the stock is 41. So I have some pie in my face, but I am sticking with it. Next item of the news. I find very intriguing the ongoing battle between Apple and Starlink. Of course, Starlink is SpaceX, or Elon Musk's space company. Now they are battling over wireless connectivity via satellite. And who do you think wins at the end? Even though Apple is the United States' largest market cap company, who is in the pocket of our buddy, President Donald Trump? Elon Musk. So, you know what? At the end of the day, I think Starlink wins out. And this is really important for Musk because even though Tesla has a bigger market cap and he owns 20% of that company, so I calculated this morning that his value in Tesla is about $176 billion, though it's down a lot. I think that his wealth will be triggered much more importantly in the future by the success of Starlink, by the success of SpaceX when it goes public. For his wealth, that is a much more important company, I believe, than Tesla has been or even will be. Next, we have some data from AMD. Now, AMD, unfortunately, has gotten behind the curve, and their technology disadvantage to Nvidia in AI GPUs, unfortunately, has increased rather than decreased. But I still really admire the company, particular CEO, Dr. Lisa Su. She turned around a bag of shit company, and I believe that that company will get it right in GPUs under her reign. But I will tell you this, they are making a big play on building out what they like to call the entire AI factory, which doesn't just include the GPUs, it includes networking gear, it includes servers. And they showed this by spending $5 billion to buy a company that's primarily involved in services and storage for AI data centers. So Dr. Lisa Su, super smart, spending $5 billion with the bet that the AI infrastructure trade is still a good one long term. I believe her, and I believe that another data point is showing that we are going to be okay with this trade once we get through the near-term turbulence. Well, next we have Google, and I think it's very interesting because probably over the long term, one of the most important use cases for AI to justify all this hundreds of billions of dollars of infrastructure spend is going to be in healthcare. And Google has bought a company called Isomorphic Labs. They helped them raise $600 million, and they're going to be focusing on AI-driven pharmaceutical development. Stay tuned, because that could be a way that we pay off the AI infrastructure build and, of course, do some great things for humanity. Next, this is kind of interesting. OpenAI had a couple of important news items. First of all, they just closed a $40 billion funding round, which values the company at about $300 billion. To put that in perspective, OpenAI's value would make it, by market cap, America's 28th largest company today. Number 28 out of the 500 names in the S&P 500. So this is a monster. And their run rate sales are about as high right now in AI as their key partner, Microsoft, and probably will overtake them. And so you can see how there is a rift developing between OpenAI and Microsoft, which owns 49% of OpenAI. But one of the things that's happening is it's a very interesting caveat that was revealed when they announced this recent funding round. This company, OpenAI, is currently a not-for-profit. That's how it was started up years ago, actually, when even Elon Musk was involved in co-founding that company. But to bring in all this capital, which they desperately need to continue to grow their company, they have to become a for-profit entity. And if they're not a for-profit entity by the end of 2025, their most recent funding of $40 billion is shaved by $10 billion. So they have a real impetus, real urgency to convert quickly from a nonprofit entity to a profit-seeking entity. And then I think there's another interesting tidbit here that makes me still feel comfortable about long-term AI infrastructure trade. OpenAI, Sam Altman, last week in an interview said, obviously tongue-in-cheek, that the new imaging that is available on ChatGPT and their large language models is so popular and so robust and so energy and infrastructure dependent that it is melting, quote unquote, melting their servers. So if you are generating lots of images through your large language model, including OpenAI's ChatGPT, you are going to need bigger and bigger and bigger data centers. So I also feel, along with Dr. Lisa Su, CEO of AMD's comments, that we are going to be okay continuing to ride this train, at least in the future, once we get through the turbulence in the near term. TikTok, very important to Americans. Got about 170 million of us on TikTok once a month. This Saturday, is the deadline for TikTok to rein in a US partner, or else they are going to be prohibited from offering their services in these United States. So I expect, because I know there's at least 3 or 4 people bidding on this transaction. So I definitely think something's going to happen. That's what I'm hearing. But you should probably expect something to happen, and it may go right down to the wire on Saturday afternoon or Saturday night upcoming. One of the things that continues to freak me out, and don't get me wrong, sometimes I make comments on this program and other programs that make me feel like I'm totally anti-Trump. There's actually something he's doing that I like very much. But I am a little bit freaked out that he is paving the way for easier crypto regulations, in the meantime, investing with his family in the very same ventures. Like DJT, Trump Media, has announced a deal, as you may have heard in recent weeks. They are going to offer exchange traded funds with a crypto partner. Very odd to me. Very odd to me. And you know what? At least this aspect of Trump 2.0, very troubling. Talking about scams, this is really interesting to me. Back to our buddy Elon Musk, announced a few days that his XAI, or AI company, is buying X, the formerly known as Twitter company that he bought for $44 billion with equity and debt back in late 22, is actually now going to be folded into XAI. And he can do that without shareholder vote because it's a private company at the same $44 billion valuation. This is what's weird. There were a number of investment managers of some note, including Fidelity and others, that co-invested with Musk back in the fall of 22 to raise that $44 billion to take over Twitter, which he rebranded as X. However, Musk can, figure out what he wants to figure out. But Fidelity and some of those other companies that invested in Twitter back then are actually today valuing what was once a $44 billion investment as low as $19 billion. So we have this forced merger with no diminution in value, where the investment managers that have to show the value on their books every quarter, as per Securities Exchange Commission guidelines, are valuing a $44 billion entity at only $19 billion. Which one is correct? I bet it's the money managers that value the entity, not the $44 billion price that has not changed since the fall of 22. And we know that since then, things have gotten rough and even rougher for Twitter, now rebranded as X. This reminds me of the 2016 very controversial forced buyout of Solar City for several $billion by Tesla shareholders. Musk was essentially forcing Tesla shareholders to absorb one of his companies that was a big money loser. Very, very controversial at the time. This is actually the same deal as 2016 with Solar City, but at a bigger scale and more expensive. So we'll see what happens there. But again, I've been around a long time. I've seen every single angle. This is worrisome. Next, Microsoft has actually taken some of the bloom off the AI infrastructure rose, not formally announcing, but a lot of people are speculating that they are pulling back on some of their AI data center buildouts. And I think that also probably impaired the value of the Coreweave IPO a bit, because about 2/3 of Coreweave's revenues last year were with one customer, Microsoft. And if they are pulling the plug on some AI infrastructure projects, then I worry about Microsoft. I actually sold Microsoft quite a while ago to raise some cash and kind of refocus on better names in tech. But also, I have to admit, if this is true, it does make me worry a little bit about the sustainability of the AI infrastructure spending. But we'll see. Is this an industry problem, which would be much more serious, or is this a Microsoft problem? TBD, to be determined. And my last stock I want to talk about here is AppLovin, right? This is a stock that I've been watching. I actually own some in the 300 range. But first of all, two short sellers came out against with their report on February 26. Just this week, another short seller, and one that's probably much more credible, Muddy Waters. That is the same firm that wrote the short report about a year ago on Super Micro and took it to the woodshed. So I'm incrementally worried. But the interesting thing here is now we have three short sellers all publishing their reports. They claim that AppLovin is cheating their customers and their online platform partners, like a Google, like a Meta. And in the meantime, even after three scathing short seller reports, all talking about these same issues, since then, we've had a 10K or annual report produced by AppLovin, and their accountants seem to be cool with it. And we've heard nothing from any of their customers or partners on the app stores, and even the regulators. And, all the stock exchanges know about this. The Securities and Exchange Commission knows about this. And so either they are investigating and they haven't announced pushing back on AppLovin, or they've looked at it and they decided it was not a thing. So in the meantime, I guess we're all waiting to see if there's any follow-up by customers, platforms, and regulators. You know what? I think what happens, no matter what happens, and I don't expect to have any kind of bombshells announced anytime soon, this company will be stuck in purgatory until they report at least their next quarter, where they make us feel better about their fundamentals. So anyway, I'm sticking with AppLovin. Super controversial. Right? I'm going against the grain here, right? We are facing not one, but two, but three short sellers reports, included one that has been published by the biggest of all, Muddy Waters. And so I'm looking that maybe I'll buy some more AppLovin, but it's going to have to find 200-day moving average support, and that would take it down all the way to 218. So anyway, I will stay on top of this story for you and report back. Now let's get into some of my tech picks. You guys, we're doing something new today, right? First of all, the backstory is, as I've told you the last couple of shows, I am pretty much on a buyer's strike. When folks go on television, talking heads like me, they're often encouraged to show a lot of energy and to come up with actionable trading ideas, whether you need to buy or sell immediately. Sometimes, guys, the right answer is to do nothing. And so for quite a while now, as we parse through all these issues, the controversy about is AI infrastructure spending going to slow? How is the world going to end on Liberation Day, which is tomorrow with Trump's tariffs? So I have a big cash position, and I'm being very careful about adding to anything. So what I've done here is, in green as usual, are stocks, and they're mostly stocks in which I'm hiding. Some of them aren't even tech stocks in until the tech smoke clears. Those are in green. In yellow, I've done something new. These are stocks I'm interested in, but we have to get through this horrible aversion to risk that we've seen in the market and get back from the risk off to the risk on trade. So these stocks, all in yellow, are stocks that I'm waiting to buy at these potentially disclosed by me for the first time today buy limits and support levels. So I won't read through all of them. You can go back into YouTube and watch this again. But the green stocks, T-Mobile, Take-Two Interactive, the old Raytheon RTX, a gold ETF, Duke Energy, and the industrial gases company, Linde, are all places I'm hiding in now. I'm comfortable with you buying today. Then I have a list of mostly tech companies that I really like. They will be coming back. I don't know when, and I don't know how deep they will fall, and so I can't buy them yet. But take a look at all of these names with the buy limits that I would be okay with you buying them at. Robinhood, Palantir, CrowdStrike, Netflix, AppLovin, which I just talked about, Guidewire, Citicorp, which obviously is a bank and not a tech stock, Alibaba, which I'm warming up to in China, Akamai, which is a very inexpensive and I think poised for a rebound US tech stock, SAP, the German enterprise resource planning software company, and Checkpoint. So I will tell you, heed my warning. You don't have to do anything. I'm actually suggesting you do nothing, but build cash, take a look at your portfolio, refine it for those that are going to have the biggest bounce when it comes back. But since I don't know how deep the fall will be, and I don't know the timing, and obviously I'm not going to do anything just 24 hours ahead of Trump's Liberation Day with the tariffs, I think this is a pretty good strategy. And so if you guys are into it, give me a word. Yeah, I'll continue pointing out these technical price levels. Of course, I also see, because I watch programming, of course, on Benzinga Pro, they do the same thing. So now let's get into some key tech trends. As I've told you many times, you got to watch the Fed, because the Fed sets the benchmark interest rate in this country. And the simplest rule is interest rates go down, asset values go up, and vice versa. But we have a conundrum. We were worried about the inflationary impact of Trump's tariffs a couple weeks ago. But then we've had some interim releases of economic data. And now we're starting to worry more about, are these Trump tariffs going to actually lead us into a recession? And of course, that would be the worst of all worlds, right? You have higher inflation and you have a recession, or at least slow growth. We call that the worst thing of all, stagflation. So it looks, if you look at the CMA FedWatch tool, that nobody expects the Fed to do anything with rates for the next two meetings. You have to get out to several meetings from now, which I believe puts us fairly close to the end of July, for anyone to believe that the Fed is going to lower rates by even 0.25%. That is a big change from what was the telegraphed monetary policy even late last fall. So next, hey, Liberation Day, Trump's words, not mine, could be big tomorrow. I'm hoping we have a situation where you sell on the rumor, like we have in the last couple of weeks in preparation for this. And maybe it's not as ugly upon announcement tomorrow as you think, and then you buy on the actual news. We'll see. This could be, one way or another, maybe a stake in the ground to show us the bottom of the market, at least in the near term. Anyway, I'll be watching this very, very closely, as I'm sure you will be too. And then the last thing I just wanted to make before we get into some questions, if you have them, is I want to reiterate, except for some very specific situations, and I've given you the prices, and some of these prices are much lower where the stocks are trading now, where I might buy some of my favorite tech stocks. Right now, the tide is sinking all the boats, and particularly the most volatile names in the market, which are my tech names. So please, big cash hoard, be super patient, don't panic, we will come back. But I will join you for the time being, as I've been in the last month or so, on a buyer's strike. A buyer's strike is cool. Nobody's forcing you to do any trades today, tomorrow, or any other day. So let's get to some of your questions if you have them. Well, guys, we'll ask Paul about NMAX at the end. Well, even though we're at the end, I don't know much about NMAX, or at least not enough to be a good source on it. I promise you, if you want me to, I'll take a look. Come back with at least with some initial thoughts next Tuesday. TSM. I like Taiwan Semiconductor. Remember, I believe that with a temporary respite that we've seen here, that the kingpins of AI infrastructure spending will continue to benefit. And of course, I'm sticking with Nvidia. I'm sticking with Broadcom. And I'm sticking with Taiwan Semiconductor to play this theme. There was a little bit of a cloud over Taiwan Semiconductor in recent weeks because it was rumored that they would buy the manufacturing facilities of Intel. But Intel has now brought in a new CEO, and he's made a couple of public comments, even though he's only been on board for a few weeks, where it looks like the company is going to dig in and they're not going to carve themselves up and sell a piece to Taiwan Semiconductor or anybody else. In the meantime, stick with Taiwan Semiconductor. I would buy it on dips, but like any of these stocks, I'm already in it, and I'm in it much lower than where the stock is trading today because I've been in it for many, many years. And so I am on a buyer strike. But you know what? That would be one that I would circle up, put in the bullpen, and maybe someday, bring to the mound and put in the game. I very much like Taiwan Semiconductor long term. An agent play for AI. I actually am warming up to two enterprise resource planning software companies that I think will lead the charge here. Believe it or not, one is SAP. And take a look at SAP's performance, the German ERP company. It's done pretty well of late, and you can see it's on my buy list, or at least in the bullpen to bring into the game. And then also stateside, I think ServiceNow. ServiceNow just made a very interesting acquisition, which I support to boost their play for agentic AI. And so I think those two companies will be strong in the space. But that's a great question. Will you recommend Berkshire? Hopefully you're not telling me, you're asking me. Yeah, I think Berkshire is a pretty good place to hide. I've invested in it before, but obviously I don't invest it with my technology hat on. And even though they cut their stake way back, which seemed to be pretty clever, Buffett and company, has a big position in Apple. And as you may know, I have not favored Apple even among the Mag 7 for a couple of years. My problem is that company, which is still may be, I'm not 100% sure, but still may be Berkshire's largest position. Fortunately, with Apple, I don't consider it a tech company because it hasn't grown its sales for about 4 years. And in tech, if you don't grow your sales, you're not a tech company. And so, yeah, of course, I admire Berkshire Hathaway. I have been to Omaha, Nebraska as an acolyte for that annual shareholders meeting. But as far as its technology exposure, me no likey Apple. Given that the new with SpaceX and Apple and the fact that Apple has no AI releases, here's my thing. I've never favored Apple, though I do have it in some accounts for many, many years. The thing about Apple, which keeps me in, even without the top line growth, I never buy it, but I just hold what I've had for many years, is the fact that the company generates so much free cash flow. Even with its paltry or no revenue growth, the company still generates about $1 billion of free cash flow or surplus cash per week, not per year, not per month, per week. And so that always essentially brings some support. In the meantime, everybody believes, I don't know if I believe it, and I've said so here, that once they get all the AI bells and whistles on an iPhone, that you are going to rush out and upgrade your phone. And everybody around the world will do the same thing. You know what? I'll believe it when I see it. All right, guys. Well, that's all the time we have for. And remember, buyer strike. You don't have to do anything at all. Reach out to me if you like. I'm very easily found. And I'll be watching, like you, Liberation Day tomorrow. I'll see you next Tuesday.